Ladies and gentlemen, good day and welcome to Salzer Electronics Limited Q4 FY23 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Deepika Murarka from Choice Equity Broking. Thank you, and over to you, Deepika.
Thank you, Neerav. Good morning, everyone. On behalf of Choice Equity Broking, welcome to the Q4 and FY23 post-results conference call of Salzer Electronics Limited. This conference call may contain certain forward-looking statements about the company, which are based on the beliefs, opinion, and expectations of the company as of the date of this call. These statements are not guarantee of future performance and involve certain risks and also uncertainties that are difficult to predict. I will now hand over the call to Ms. Savli Mangle to discuss the financial performance of the company. Over to you, ma'am.
Thank you, Deepika. Good morning, everyone, and thank you for joining us today to discuss the audited financial performance for the fourth quarter and year ended March 31st, 2023. I have with me Mr. Rajesh Doraiswamy, Joint Managing Director, Mr. Murugesh, Joint Company Secretary, Mrs. Menka, GM Accounts, Mr. Sanjay, Assistant Company Secretary, and Mr. Raman, COO of KC Industries. I shall take you through the standalone financial performance of the fourth quarter and a year ended. During the fourth quarter, our revenues increased by 29% year-on-year to rupees 295 crores from rupees 228 crores in the previous corresponding period. This is driven by higher demand for industrial switchgear as well as wires and cable businesses. The EBITDA, excluding other income, was rupees 23.3 crores in Q4 as against 12.9 crores in Q4 FY22, a year-on-year growth of 81% on account of increased sales in the switchgear business. The EBITDA margin for the quarter stood at 7.9%, rise of 224 basis points year-on-year. This was mainly on account of increase in sales from higher margin industrial switchgear products. The profit after tax was at 9 crores in Q4 FY23 as against rupees 3.8 crores in Q4 FY22, year-on-year growth of 134%. Coming to a full year financial performance, in the year ended March 2023, net revenue was rupees 1,013.1 crores as against 783.6 crores in FY22, year-on-year growth of about 29%. This was driven by strong demand for almost all products on the back of better market conditions both in India and global markets. The EBITDA, excluding other income, stood at about 91.1 crores in FY23 as against 63.8 crores in FY22, a year-on-year growth of 43%, mainly on account of higher sales in all product divisions. The EBITDA margin was at 9%, a year-on-year increase of 86 basis points. The profit after tax was 36.4 crores in FY23 as against 22.5 crores in FY22, a year-on-year growth of 62%. The tax margin was at 3.6% in FY23 as against 2.9% in FY22, a year-on-year increase of 72 basis points. Moving to the breakup of revenue as per business division, the industrial switchgear business contributed to about 53.4% of the total revenues in this quarter and 54.3% during the year. The EBITDA margin for this business stood at 10.5% in Q4 and 11.7% in FY23. One of our high demand products, the three-phase dry type transformers, grew over to nearly 300% year-on-year in Q4 FY23 and 180% in FY23. The wire harness grew 52% year-on-year in Q4 FY23 to 23.5 crores from 15.4 crores in Q4 FY22 and 18% year-on-year in FY23. The wires and cables division contributed nearly 41% to our revenues this quarter and 38% during the year. There is an increase of nearly 19% year-on-year in this division during the quarter and 15% year-on-year. The EBITDA margin in this division has been steady at 5.5% in Q4 and 6.5% for the full year. The building products division contributed nearly 6% in this quarter and 7% in the full year. The EBITDA margin was 2.6% in Q4 and 2.7% in full year FY23. On the export front, we continue to see steady growth, mainly due to higher sales in America, including South American countries like Brazil, Argentina, and Chile. Exports to the Americas grew 55% year-on-year in this quarter. For this quarter, the export share of the revenue was 27%. Growth in exports was nearly 73% year-on-year and 18% quarter-on-quarter. For the full year, exports was 26% of the revenue, growing 42% year-on-year. I'm happy to share that the board has recommended a final dividend at the rate of 22%, that's rupees 2.2 per equity share at a face value of rupees 10. This is subject to the shareholder approval. I would like to hand over now to Rajesh to take us through the business development and the VFX. Thank you.
Thank you, Savli. Good morning, all of you. I think we have listened to the financials division-wise from Savli. So the past financial year actually brought a lot of headwinds for the economy and the overall industry in the form of various macroeconomic factors like increased inflation, exchange rate fluctuations, even reduced demand from the European markets and also some of the Asian markets. Despite that, I think Salzer has crossed various important milestones during this period, and the most important one was that we have crossed the rupees 1,000 crore revenue milestones by achieving 1,037 crore on revenues on a consolidated basis. This was possible only due to our advanced engineering capabilities backed by a strong in-house and R&D team, product innovation, strong technical collaboration, and long-standing customer relationship. So I'm once again very happy to share that our revenues for the year crossed 1,000 crore, which was one of the key targets we had set for ourselves a few years ago. We are proud of this accomplishment, which is a testament to the hard work and dedication of our team. I would also say that this is just one step in our overall growth story. As you all must have been aware, demand for the infrastructure has been growing well in the country in the last financial year. There is a growing demand for a lot of projects such as roads, bridges, buildings. Government's focus on smart cities development is also expected to spur demand for a lot of electrical products of our portfolio. Even the private investments continue to happen in a big way in India, which is also increasing the demand for all our products. There's increasing demand for renewable energy sources such as solar, wind, and hydropower, which has opened new growth opportunities and demand for switchgears, transformers, wires, and cables. During the year, we have seen good growth in all divisions, mainly due to better market conditions in India and also abroad in specific markets. On the switchgear front, growth was driven by high-margin products like toroidal transformers, three-phase transformers, wire harness, rotary cam switches, and isolators. All these comprised approximately 65% of our switchgear division sales. To cater to the continuous demand that is coming from the country, we have set up a new manufacturing facility strategically located at Hosur in Tamil Nadu. Speaking of our wires and cable division, there was a slowdown in the first 3 quarters due to high inflation and slowdown in the agri-market segment, leading to lower volume sales in the first 3 quarters. However, in the 4th quarter, the sales started to pick up, and we see similar demand continuing into this year. Over the last 2 to 3 quarters, we increased our sales price for various products. At the same time, the raw material prices also started to stabilize and reduce a little bit, which helped improve our EBITDA margins year on year. We also expect to reduce the raw material consumption in the coming quarters, which will further improve the realization of our price, which leads to better EBITDA margins in the coming quarter. On the export front, 26% of our revenue this year came from exports, mainly on account of higher sales in North America and also South America. Some of the new products that we developed for USA and Australia during COVID time has started to give revenues from March 2023 onwards. This year, we will see revenues from these new businesses coming. As far as our subsidiary KC Industries is concerned, the sales have been growing well and EBITDA margins are also getting better. KC's top line grew 42% to rupees 42.3 crore from 29.8 crore last year. PAT grew 87% from 1.86 crore last year to 3.5 crore this year. At Salzer, we have continued to focus on improving our operational efficiency. We had an internal target of achieving 12% ROCE in FY23, which we have achieved this year. We also improved our net debt to equity for FY23 at 0.65%. I am happy to share that the net cash flow from our business operation was positive at around 23 crores. Going into the next fiscal, we expect to grow at around 20% with our strong product offerings and brand position in the market. Based on the domestic and export outlook, we are cautiously optimistic about the overall business performance. As a part of our strategy, we will continue to not just focus on profitable growth, but also on capital efficiency, endeavoring to improve our working capital cycle and being a cash flow positive company continuously. I thank the entire team at Salzer Electronics for their untiring efforts and all our stakeholders for their continued support and faith in our company. This is all from our side for now. I would like to thank you all very much for your time and attention. We can now take questions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Participants, you may press star and one to ask a question. The first question is from the line of Ravindranath Nayak from Sunidhi Securities and Finance. Please go ahead.
For a decent set of numbers. So my question is regarding this, how the capital allocation, you have done rightly around 23 crores of operating cash flow this year, and also where we have actually gone through a differential issue which will yield around 47 crores of money to the company. And and also you are expecting 20% growth in a business and also going for a capital efficiency. How the capital allocation policy and how we are going to spend this money in the next 1 year or 2 years time. So please share some perspective on that. Thank you very much.
Sir, thank you very much. I think the point is that we will be doing some capital expenditure because we have set up a new facility in Hosur, which will take up around 14-15 crores of investment for further growth. And I think going forward, we also have the joint venture for electric vehicle charging stations coming up. Hopefully that will require some investments. I think we have not really allocated how much we are going to put in, but we expect that the electric vehicle charging station JV will take at least 12 to 15 crores in the next couple of years. So this is what we will be allocating, and the rest will be utilized for the working capital in the company.
Okay. So, can you give a product-wise breakup of the switchgear business? Because a lot of things are completely jumbled together in one segment. If you can give at least 2 to 3 product categories which are contributing to the business in the switchgear business, that will be helpful.
I think I mentioned in the call that our top-selling products for 65% of our sales comes from the toroidal transformers, three-phase transformers, rotary switches, wire harness, and isolators.
Okay.
These are the top-selling switchgear products for us.
Okay. Okay. And sir, when we can expect that the complete integration of KC, when we acquire a 100% shareholding in our business, when we can expect on this?
So we are only a 74% shareholder at KC. And as far as the operations are concerned, we are fully integrated. The companies work together and are achieving the efficiency by utilizing each other's strengths.
Okay.
And that's why we see a tremendous improvement in PAT margins at KC Industries.
So can we expect 100% holding in KC in the near future, or we will continue in the similar structure for quite some time?
At 100% holding, then we have to delist. No, there is no plan as of now.
Okay. Okay. And sir, in the product category, industrial switchgear, wires and cable building segment, please, if you can give a breakup of approximate margin breakup of EBITDA margin breakup of all these three categories, that will be helpful, sir, for FY23.
Yes, I think the EBITDA percentage for industrial switchgear for this year is at around 11.7%.
Okay.
The wire and cable is at 7%, and the building segment is at 3%.
Okay. 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 Okay, sir. Thank you very much.
Yeah.
Thank you.
Thank you.
Thank you. Participants, you may press star and 1 to ask a question. Next question is from the line of Senthil Kumar from Joindre Capital. Please go ahead.
Good morning, sir. Thanks for the opportunity. And firstly, congrats for the good set of numbers. I know the opening commentary you have highlighted that you have developed a new products for North and South America. Can you elaborate what is the product and what is the revenue we can expect, for FY24?
Sir, I think this year we have grown close to 30%, which is actually a strong growth, I would say. Going forward, we are projecting around 20% growth on the top line, and on the bottom line, we should be growing at around 25%.
Okay. No, actually, my question is about the new product development for North and South America. Now, I'm asking, what is the incremental revenue we can expect from that?
Okay, about the new products.
Yeah.
Okay, these products are, the potential for these products are quite high. But we expect, I think in the first year, we will be seeing a revenue of close to $1 to $2 million US in US.
Okay.
But the potential, we expect that in the next 5 years, we should be able to clock around 20-25 million sales only in these products from the North American market.
Okay. So what is the product, sir? Is it switchgear or?
They are contactors for various applications in US. Contactors.
Oh, okay. Contactors. Okay, sir. And my second question, in the earlier Concall, you said for EV conversion kit, we are developing a prototype. Where are we, sir? What is the update on that?
I'm afraid that I don't have any new update because, as I mentioned in the last call, I think we are going slow on that conversion kit project because we are not seeing much potential, sales revenue potential or profit potential in that product and technology. So we are actually going slow, though we are doing some research and prototyping, but I don't have an update that needs to be given right now.
Okay, so what about this charger unit, sir?
Chargers in the final stage. I think it's under testing, so we should be launching the chargers mostly in the second quarter of this year for sale.
Oh. Okay, sir. Okay, sir. Thank you, sir. All the best, and that's it.
Thank you, sir.
Thank you. Participants, you may press star and 1 to ask a question. The next question is from the line of Gaurav Sachdeva from Further Investments. Please go ahead.
Hello. Good morning, sir.
Good morning.
So my question is regarding the EBITDA margins. In comparison to Q3, despite of our revenues have increased in both the segments, but the EBITDA has dropped more than 200 basis points. What is the reason, sir?
I think in the switchgear business, it's because of the product mix. What happened was, I think we had tremendously higher sales coming in Q4 in wire harness and three-phase transformers. which has actually pulled the EBITDA margins by close to 200 basis points. That's one. On the wire and cable, again, I would say it's a mix of product and various sectoral sales that has happened. But this is only a quarterly change. Overall, I think we are seeing a 200 basis point improvement year on year, and we will continue to see at least 100 basis point improvement over the next financial year.
But in your
all segments.
In your last con call, somewhere you told that maybe we can have 11% EBITDA on an overall basis.
Yes, we are trying to getting there. As you see that we have improved 1% compared to last year. We will definitely get to around 10.5 next year, and we will reach blended 11 in the next few 5-6 quarters.
Thank you. That's from my side. Thank you.
Thank you. Next question is from the line of Deepak Poddar from Sapphire Capital. Please go ahead.
Hello. Am I audible?
Yes, sir. You can. Yeah.
Yes. Thank you very much, sir, for the opportunity. So I just wanted to understand. I mean, in terms of the previous question on the margins front, I think what has changed, because earlier we were targeting 11% EBITDA margin FY24. So is there anything that has changed in terms of our the raw material scenario or the pricing scenario, which kind of has pushed back our target to maybe 1.5 years now we are targeting, right, as compared to?
Nothing major has changed. As we all know that FY21-22 was a very, very tough year for all the businesses due to this post-COVID scenario where raw material prices increased tremendously over the year and fluctuating widely. So overall, if you see our switchgear businesses, EBITDA margins dropped drastically. I think we used to be at around 13-14% EBITDA margin levels in our switchgear products, which considerably dropped to around 9.5% in FY22 because of the raw material price fluctuations, so which we gradually started improving in FY23, and we are at around 11.7% as of today. The one thing that has changed is I think the raw material prices stabilized, and we have got our price increase from our customers. I think that has happened. But also during the course of the year, we have seen a slight change in our product mix, which is giving the revenues to switchgear business. So the more the transformers that sell, then I think the blended margin inside the switchgear business will be slightly down compared to what we will sell more of the contactors or switches and terminal blocks and things like that. So there is a slight change in the EBITDA margin within the switchgear businesses. There are certain products like rotary cam switches or isolators or cable ducts that can give us 17% EBITDA or 16% EBITDA. And there are also certain products like wire harness or three-phase transformers or toroidal transformers, for example, which will give us a 11% or 12% EBITDA. And also sometimes we sell into certain sectors where we are new, where we have to get the business. So then the price we have to be competitive, and the EBITDA margins in those sectoral sales also can be little down. So that is the reason that we have not gone to 12.5% EBITDA margin, but we are at around 11.7 this year. And overall, we couldn't get to 10%, but we are at around 9%. But I'm sure that we are seeing a jump in the absolute numbers. I would say year on year there's a 80% jump on the absolute EBITDA number from 63 to 92 crores, and we will continue to see similar growth going forward, and we will improve the EBITDA margin percentage also going forward, because we see a lot of stabilization in the raw material prices, and we will definitely improve on the switchgear EBITDA margins by around at least 1% in the year that's coming, in the next year.
Okay, understood. But in terms of now in switchgear segment, so currently what 65% of your switchgear revenue is catered by high margin product in this division?
Actually, all the switchgear products I would consider as high margin, but within that high margin there are differences. There are certain 11.5, there are certain 15%. So this combination is what is bringing a 12% EBITDA margin to us right now.
Okay. Okay, I understood. Fair enough. And in terms of your outlook that you have shared, now in terms of, even if I take 10.5% EBITDA margin next year, so your bottom line should grow much faster than 25% that you are kind of given as a guidance as such. Because even if you take 10%, it should grow much faster than your 25% bottom line.
Yes, I think it will grow. It will have a similar growth, I would say. We will see at least a 35% EBITDA absolute number growth for 35-40%.
Correct.
Yeah, but just being a little conservative, let's see how the first 2 quarters goes, and then we can have a real projection for next year. Because the markets are still, I would say, little fluid. People are little conservative. Though the Indian market is growing well, but we don't know how the global headwinds is going to turn out in the next few months.
Correct. So any specific, concern that you have in terms of business or globally, or anything that as an investor we should?
If there is a financial risk that everybody thinks that is going to happen in the U.S., then if U.S. gets into a recession, then I think it will be a problem for the entire world market. Then we will see a short-term, maybe a 2-quarter slowdown. If that doesn't happen, then I think we are good that we should be able to grow at the same level. Because even though we do a lot of business within India, I think those businesses are also dependent on various other foreign markets. There are a lot of private investments by the foreign companies that is happening in India. There are a lot of others who export out from India. So which all may be affected.
Okay, understood. Yep, I think that's about it from my side, sir. All the very best. Thank you so much.
Thank you, sir.
Thank you. Next question is from the line of Ankur Agarwal from RC Wealth Solutions. Please go ahead.
गुड मॉर्निंग सर. ये आगे 2-3 साल में कैपेक्स प्लान क्या है क्या?
Capex plan, our regular maintenance capex we are doing, and as I said, we are having this Osur plant investment, and the next capex will be for the EV chargers.
How much amount required for that capex?
Osur, we have estimated around 15 crores in this year, and the next year for EV chargers it will be close to around 15 crores again.
Okay. ये रेलवे में क्या अपॉर्चुनिटी आपको लगती है? आपका रेलवे में मुझे लगता है कि बाकी यहाँ की जो है रेलवे इंडस्ट्री बहुत ज़्यादा समाज पे है, तो
we are already doing business with railways. We are selling our switches and various other switch gears and transformers to railways, and we are seeing constant business from railways. Not great growth, but constant business.
Hello.
Hello.
आगे 3-4 साल में टॉप लाइन क्या समझते हैं सर कंपनी का?
No, I didn't get your question, sir, because I am not very good in Hindi. So if you can translate, somebody can.
Next 3-4 years, how much company will grow? Like how much top line and bottom line?
Sir, we expect to grow at around 20% for the next 2 years at least, for sure.
Okay. And bottom line will be better than top line?
Yes, yes.
Okay. Thank you, sir. Thank you.
Thank you.
Thank you. Next question is from the line of Sanjay Kumar from iThought PMS. Please go ahead.
Hi, sir. Thanks for the opportunity. First question, so a very broad question on strategy, vision, and capital allocation. So you have toroidal transformers, wire harness, where you're putting up capacity, but you also have dry type transformer business where peers like Voltam, CG Power are putting up capacity. You have wires and cables, K, Upper are putting up capacity. In fact, Upper is exporting a lot of cables to US, Australia. So without reaching a scale in these segments, why venture out? Is it because the base business growth is very slow and you want to move to other segments? So why EV charging? Does it have any moat from the JV? and you were even looking at retrofitting or conversion kits for three-wheelers. So I don't see lack of capability because we have UL license for many products in the US. So capability is not a constraint. Just that I don't see cohesion and vision or long-term strategy. I may be completely wrong. So if you could explain your thinking and rationale. I'm just trying to think it through in terms of management bandwidth. Will be diluted in terms of EV charging and the retrofitting, or do we have any modes in EV charging? So any thoughts on these lines, sir?
Yeah, got your point, got your question. I think that our total long-term vision is to be a global electrical solutions provider. I think that's what we are looking at. So anything to do with electrical solutions, we want to be there, and we want to be a first mover. So that was one of the reasons we got into electric charging, because we thought that I think that's EV is going to be a future and the next 10, 15 year, at least a 2-decade business from now, before the technology can change or whatever happens. So we thought, we have all the capabilities, we have all the components that will go into a charger, and why not we make a charger? And luckily we got a JV partner to manufacture that, and that is how we are into that. That is the reason that we are into that. Conversion kit, maybe you rightly said, maybe it's a little deviation from us, but as we ventured into that, we understood that that business is not giving us scale or giving us great opportunities. So we are scaling back on that, which I've already said in the previous 2 calls that we are scaling back and going slow on that conversion kits. But charging, yes, we have a reason for that, because we can use our components and we have the technology, and we can see that the future business is there. The future technology is there, and we, as an electrical company, we want to be in that space. That's the reason we're doing that. On the other product expansion, as you know that we started off as a rotary cam switch company. That's how the company started 3 decades ago, and there is a limitation for a rotary cam switch within India or globally, because the market size is limited. So, and then we ventured out and started making various other different products, is that we wanted to grow on scale and also be with the customer connect with many products. And that's how almost all the top switchgear companies across the world have grown, including Schneider, including Siemens or Eaton, or even the Indian company like Larsen & Toubro or Havells, for example. L&T is a switchgear company, but they have 25 products within the switchgear segment. So that's how this business happens in the market. The business trend is like that. We actually went a little more diversified, started making transformers, wire harness, and also various other products that may or may not fall under the switchgear definition, but it sells to the same customer. The same customer uses this. Sometimes we get a customer for rotary cam switch because of transformers, or vice versa. So that's the advantage of having the large product portfolio and trying to expand all the products. And as you asked rightly, how and which
तुम्ही ज्या व्यक्तीशी बोलत आहात त्याने तुमच्या कॉलला होल्डवर ठेवला आहे.
Hello.
Yes.
Yes, you're audible. You're audible.
Yeah. So on how and which product you are going to expand, I think as the opportunity comes, I think we are allocating capital and expanding capacity dynamically as the opportunity comes to us. I think last year was the year for 3-phase transformers, because I think the growth in 3-phase transformers was close to 78% or 100%, or no, 250% actually year on year. So when the demand that came in, then we had to be dynamic and we had to expand the capacity, and then we have to capture the market. So that was the reason that from 25 crores in FY22, I think we were close to around 75 crores in FY23 on that business, and it continues to. I think the growth has slowed down, but it continues to grow at around 30-35% in this year. So that is how we manage the product portfolio within the segment. And on the scale, I think you mentioned 2 companies, Voltamp or CG. I think we are not in that space. I want to clarify our three-phase transformers are dry type indoor application transformers for low voltage, whereas Voltamp or CG makes oil-cooled or cast resin transformers for high voltage distribution transformers. We are not into that space.
Okay. I think Voltamp 30% of their business is dry type, but anyways, just to
dry type, high voltage.
Right.
They are all 11 kV or no 22 kV, those kind of transformers. We are only in 440 volt, less than 1000 volt.
Yes, sir. So just two follow-ups there then. So if dry type is growing so fast, any capex for wires and cables business or the dry type transformers? That's one. Two, what components in the EV charging? I mean, how much will we be making in-house and how much will be bought out in the EV charging product?
Around 30% of the value of EV charger will be in-house components.
Okay. Okay. And on the capex in dry type and wires and cables?
Yeah, as I said, I think the wire and cable is a little different because we are not doing any major capex because we still have a capacity open in wire and cable. But dry type transformers, yes, we have done around 4-5 crores in this year on capacity expansion, and we will continue to do around 3-4 crores in the coming year for three-phase dry type transformers. Not much. I think it is dynamic. As and when it requires, I think we will keep adding machineries for that.
And asset turn for dry type would be 6-7x?
It's right now at around 4x, 4.5.
Oh. Okay. Okay, sir. Just last question, if I may. 5 years from now, what kind of product mix breakup are you looking at in the top line?
The way that it goes, looks like I think we will be a 60-30-10 or that's how it is. 60% from the industrial switchgear business, 30% wire and cable, 10% from building electrical. That's how I'm looking at it.
And EV charging will be part of?
No, EV charging will be a subsidiary.
Okay.
So that will be again. I think the business is still evolving. If it grows, I think it can give an equal amount of revenue.
Okay. 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 So that's it from my side. Thanks a lot for the detailed answers.
Thank you. Participants, you may press star and 1 to ask a question. Next question is from the line of Manish Maheshwari from Manu Group. Please go ahead.
Hello.
Good morning.
Yeah. Hi, sir. Good morning. Sir, you said you used to command a EBITDA margin of about 14% odd in your switchgear business, right? Which eventually came down to 11% during COVID.
It has actually come down to 9.5 last year.
Okay. So when do you expect margins to restore, north of 14 or at least 14%?
That's why I said no. Whether we will go back to 14%, I'm not sure because of the change in the product mix. Because if you go back a few years, we didn't have transformers as a top-selling product in the switchgear segment. We had all other products in the switchgear segment, which gave 15%, 14% EBITDA margin. When the volumes grew, I think in my opinion, as of from 11.5 right now, we may touch around 13% in next year, FY23, 13.5%.
FY25 is a year after that, right? FY24 and then FY.
Yeah. I think we will see a 1.5% improvement year on year.
For the next year, you mean for FY24?
24, 1 to 1.5%.
And so, if I may ask you, what are your, your key raw materials?
Key raw materials are various engineering plastics. You're talking about switchgear business, right?
Right.
Switchgear business is various engineering plastics. We buy copper. We also have silver as a content, small content, and then steel, PVC.
It's a combination of variable set of products, right?
Yeah. These are the top commodities, I would say.
And how about wire and cable?
Wire and cable is copper and PVC.
Oh. All right, sir. Thank you so much.
Thank you.
Thank you. Next question is from the line of R. Govindraj, individual investor. Please go ahead.
Sir, can you throw some more light on the patents which are in the process, sir? I think we are having some 6 products which are in process now.
Yes, I think there are certain products that we have applied patent for, like one for rotary switch, again a new technology rotary switch we have applied patent. There are some contactors, some contactors we have developed new, which we have applied patent for, and there is also a wire management, the cable ducts we call, but the broad name is wire management system. We have applied a patent for that. There are also new designs, new concepts, which we have applied patent for.
Any timeline, sir, when you'll be getting it?
I think next 2 to 3 years.
Okay, sir. And regarding, you said that about we are getting into new contactors. Whether the bimetal kind of contactors we are making it in-home or we are outsourcing it from other manufacturers, sir?
In the contactor, there is no bimetal. I think bimetal comes into play when there is a overload relay.
Okay.
So bimetals we source out.
Source out, okay. Any improvement can be seen in the wires business because Finlex cables and other cable manufacturers are getting higher margins. Whether any improvement can be done in our side?
Yes, sir. We are constantly working on that. Unfortunately, our segmentation in the wire and cable has been more into agri segment, and our distribution is through Larsen and Toubro. And that's the reason I think when the agri segment is a seasonal market, so when it goes up and down, we are struggling. We are trying to bring down the dependency on that particular product segment, but it is taking a time. I think it will take some more time before we see 8 to 10% margin improvements, 8 to 10% EBITDA margin in the wire and cable, at least 2 years from now.
Okay. And regarding supplies to LMW and LG, what sort of materials we are supplying to them, sir?
Custom built control panels.
Control panels, okay.
Yeah.
But 100% they are sourcing it from ours or in case of LMW they have LSPS?
Yeah, any OEMs will always have 2-3 suppliers. So we are just one of the three or one of the 2.
With regard to LMW or LG, sir? Both. Okay, thanks. Thanks a lot, sir.
Yes.
Thank you. Next follow-up question is from the line of Deepak Poddar from Sapphire Capital. Please go ahead.
Hello.
Hello. Yes, sir. Good morning. Good afternoon.
Yeah, good afternoon. So just one more thing, wanted to understand, how do you see the revenue scale up in your EV charging business? I mean, what sort of revenue we might target this year and over the next 2 years?
This year I'm not projecting much because this is going to be the first year. We are expecting some sales back to our collaborator because of the demand that they are seeing in the European market. So that is one opportunity that we are looking at, and we are also looking at some opportunity within India where there are companies who are doing charging services. So once the chargers are ready, we are trying to sell our chargers to those companies who are installing and doing charging services. So this year we are not really projecting much, but next year I see that at least we should be able to do a 35-40 crore top line if everything goes well.
Okay.
But this business, I would say, is constantly evolving. It's quite fast. So I will not be able to tell next year whether only the sale of chargers will give us revenue or there will be any other opportunity that will be coming to us, or maybe the company itself will get into a charging services business, and how the revenue models will be in those kind of business. I think it is still a little fluid.
Correct. Correct. And in the past, we had a vision of maybe 500 crores revenue from this segment, right? Is that still what we are targeting over the years?
Yes, I think it is still possible because we see that the demand for chargers will continue to grow as the electric vehicle starts coming in. So I'm definitely expecting FY25-26 the demand should be very good. A lot of companies should be getting into this charging space, and I'm still hopeful that 500 crore revenue from EV charging space is not far away.
So maybe 5 years is what the aspiration would be?
Even before that, even less than that, I would say.
Yeah. Okay, understood.
I think the speed at which the electric vehicle markets are growing, I would say it can happen much faster.
Correct. Understood. Yep, that's it from my side. Thank you so much.
Thank you. Next question is from the line of Sriram R, individual investor. Please go ahead.
Thank you for the opportunity. I have two questions. One is, can you give the breakup of, wires and cable segment, like how much is for copper, how much is for wiring harness for FY23? And my second question is, where do these toroidal transformers go into? Who are your customers? And if you can also talk a bit about your competition there, that would be very helpful.
You're talking about the sales revenue breakup for
yes.
wire harness
yes.
and wires and
yes.
cables?
Yes. Out of wires and cables, how much is each of these subsegments?
But it's totally different. Our wire and cable sale, I think we have done around 390 crores last year. The 390 crore is purely wires, raw wires, cables to market. We sell it. And wire harness, we have done around 70 crores last year, which is a product, because we take the wire and we do a lot of process in that wire before we sell that to a OEM. Wire harness is sold to OEM. Wires and cables are sold in the market to the retailer, to the dealer, and to OEMs. So it's two different businesses. So that's around 390 crores, and this is around 70 crores.
So this 390 crores is purely copper wires, right?
Yeah, copper. We only make copper wires. We don't make aluminum wires.
Okay. Understood, sir. And on the
toroidal transformer is nothing but a transformer, a little different transformer. It can replace the normal transformers in the market. So any transformer, a small transformer, I'm not talking about the large transformers on the roads, the distribution transformers, but these are small equipment transformers that you see inside a stabilizer, inside a UPS. That's a common equipment that I can cite. If you can see a stabilizer, a transformer inside a stabilizer is a stabilizer which a toroidal transformer can replace. A toroidal transformer is a little different in technology, which is high efficient. Sometimes the shape and size can be adjusted to suit the requirement of the customer. These things it will be having low magnetic noise. These advantages will not be there in a normal EI core traditional transformer. So that's the difference between a traditional EI core transformer and a toroidal transformer. So the competition, I think there are hundreds of manufacturers of standard traditional transformers in the country. If you take toroidal transformers, there used to be very few, but now I think a lot of people have started making toroidal transformers also, because the whole technology, I think people are converting from EI core into toroidal transformers because of the high efficiency and the advantages of flexibility in shape and size. So that's the difference between toroidal and the transformers. And the application is wide application, medical equipments, any equipment. That's a toroidal transformer that is being used.
In that case, you will have a diverse customer base, right, for this
very large customer base, yeah.
Okay. Can you name some, sir? Few customers and toroidal transformers.
Yeah, we think all the large OEMs we supply. We supply to ABB, Schneider, Eaton.
Okay.
There are some petrol pump manufacturers to whom we supply transformers.
Okay, that's helpful, sir. Thank you so much.
Yeah.
Thank you. Next question is from the line of Anand Chaudhary from Electrum PMS. Please go ahead.
Thank you for the opportunity. My question is regarding this EV charging segment. So what would be the EBITDA margins in this segment, sir?
It's maybe a little too early for me to give a figure number on that, but I expect that it should be between 18-20%, because it's a new technology product. There are not many players in the field, so I'm optimistic that it should give us a 18-20% EBITDA.
Okay. Any number on the capacity, volume wise? What is the capacity today we have?
We right now we have 100 charges per month.
100 charges per
month.
Okay. So we are saying that we will do 500 crore revenue in this thing. So we are going to increase the capacity, or we can do this with the existing capacity?
No, I think the existing capacity we can't go. I think it can go around 120, 130 crores. For 500 crores, then we need to invest further.
All right. Thank you so much.
Yeah.
Thank you. Next question is from the line of Rohit Ohri from Progressive Shares. Please go ahead.
Hi, sir. Congrats on achieving this target of 1,000 crore. And glad to hear that long-term shareholders like us are rewarded. So a couple of questions. First of all, we did touch upon the contactors and the relays. So do you think that there is opportunity for Salzer in terms of China plus one or Europe plus one? And if there are, then would you like to take us through that?
Yeah. Good afternoon, Rohit. Thank you for your wishes. Yes, I think China plus one is definitely working as an advantage to Salzer and our products, not just the contactors and relays, but overall as a company, we are seeing as a country, we are seeing China plus one as a plus. I think in the last two years at least, we have seen so many companies who have approached us to given inquiries to buy products, particularly from the US and the Australian markets, and also a lot of foreign companies who have set up facilities within India for manufacturing, or also becoming our customers. So definitely that's a continuing story. People want to de-risk China and want to get into other manufacturing locations. So they're scouting for locations, and definitely I think India is there at the top, along with, of course, other countries like Thailand, Vietnam, or Indonesia.
Okay.
So we are seeing growth because of that.
Okay. And any number would you like to put in terms of the client addition, or maybe the clients who had gone and come back to Salzer, and in terms of revenue?
So there's no client that has gone out and come back, but we have got new clients. As I said, the new products that we developed in the last 2 years for a couple of customers in US have started seeing revenues in March. I think this full year we will see some 1.5 million revenues from those products from these two clients in US, and at least 1 million from Australia, New Zealand. So these are the new additions that we have got for this year, and I think this will definitely grow in the years coming, FY25 and 26. How much more new business you will get, if you ask me, that is something that I will not be able to judge and give a number now, because the opportunities are coming. So I think we will continue to see good growth if this happens constantly and continuously. That's what I'm hopeful of.
Okay. So we did speak about toroidal transformers and the dry type. And looking at the capacity, I think that we should be at 100% capacity. So are you looking at some debottlenecking that is happening in the plant currently?
I think this value engineering, debottlenecking is a constant work. So we are doing that constantly. The toroidal transformers, or even three-phase transformers, or a rotary switch, or any other switchgear or contactor, I think the capacity expansion is quite dynamic. Since it's dynamic in the sense, what I mean is, like, as and when we see that we are touching 80%, 85% capacity utilization, and then what we start doing some small expansion, and then try to bring it down to 65, 70%. So that's how we have been going, because we can't really go and do a 95% utilization in these machinery. The process and the way that the production is happening, it's a little bit complicated. So we will not be able to achieve a 95% capacity utilization like in a continuous process industry. It's not possible in this. So I think at the max we will be able to achieve around 85% utilization, and then by that time I think we'll start doing expansion.
Because we have ample of property which is unutilized in one of the units. I believe Unit 3 is having 1.5 acres of free land. So I was just gauging if at all you have any more plans, because the demand is also increasing, favoring Salzer and the products that we sell. So
yes. Your land is available, so we can construct building as and when our existing space is fully utilized. So right now, since we have gone to Hosur, I think we would like to fill that up and see how that business grows and that unit gets full. And in the meantime, we are also filling up the empty spaces within our factories here, and we are continuing to grow.
So the commercial production has started in Hosur, because the presentation says that.
Yes. In April it started.
Okay. We did touch up a little bit on the solar sector and the opportunity there. So what sort of revenue can we anticipate? Because this is the new sector that people are looking at, and
which one?
The solar sector.
Solar sector. We are actually a tier 2 indirect supplier to solar renewables. Any solar inverter manufacturer or a solar park that is coming up means there are inverters being used, and we supply components to those inverter manufacturers. And it's a windmill, then we supply components to Danfoss, Enercon or Siemens Gamesa. These are the companies that we supply products to. So when we see a lot of demand coming for renewable power across the world starting last year, and we see good demand going in for the next 2 years in these products, in India as well as globally. So there are companies, large companies who make products for wind and solar, and we are suppliers to them.
Any number you'd like to put for the orders that we have for the solar?
I think we actually speaking, we are doing a large quantity of 3-phase transformers for solar.
Okay.
So one of the main reasons that we have grown this 300% last year is, I would say, half of the business came from solar.
Oh.
So half of the growth came from solar. So I think that business continues. 3-phase transformers and wire harness will be the primary product that we will be selling into the renewable business.
Okay. So one last one from my end. You did mention that in your opening remarks that you have just crossed the first step in the growth story of Salzer, and there is growing demand. So is it fair to assume by 25-26 you will be a 1,500 crore company, and by 28 you should be targeting double of the revenue what we are at today?
I think over the last 10 years we have given a 16-17% CAGR in sales, and in the 5 years 18%. Hopefully we will continue to better that in the coming years.
Okay, sir. So that answers the question. Thank you, sir. Thanks a lot.
Yeah. Thank you.
Thank you very much. I now hand the conference over to Mr. Rajesh Doraiswamy for closing comments.
Thank you, Choice, and thanks to all the stakeholders, investors who are here today in my call, taking so much interest and having faith in the company. Looking forward to meet all your expectations, and looking forward to talk to you soon in the next call. Thank you all very much. You all have a great day.
Thank you very much. On behalf of Salzer Electronics Limited, that concludes this conference. Thank you for joining us. You may now disconnect your lines. Thank you.